Hello everyone, welcome back to our channel. Today we're diving into a hot topic, Central Bank Showdown. Will rising interest rates crush the crypto rally? We'll explore the impact of increasing interest rates on cryptocurrency markets, compare potential outcomes for Bitcoin and other prominent digital currencies, and provide resources to help you understand and assess the evolving crypto landscape. Let's get started. First, let's talk about the impact of rising interest rates on cryptocurrencies. Opportunity cost higher interest rates can indirectly affect the price of cryptocurrencies like Bitcoin. When conventional interest rates are low, Bitcoin and other proof-of-work cryptocurrencies that don't provide holders with interest payments can become more alluring to investors. This demand can push up their prices in a low-yield environment. Conversely, when conventional interest rates are relatively high, the allure of these cryptocurrencies may decrease. However, this effect can be slightly offset with proof-of-stake digital assets like Ethereum's Ether, ETH, which do offer a rate of interest from staking activities to secure the network. Risk sentiment changes in interest rates can influence overall market sentiment. When central banks raise them to cool down an overheating economy or combat inflation, it can signal a more restrictive monetary policy and a desire to slow economic growth. This could potentially dampen risk appetite in financial markets. In such circumstances, investors may move away from riskier assets like growth stocks and digital assets, including Bitcoin, towards safe haven assets that typically pay interest. Inflation expectations. Interest rates are often adjusted by central banks in response to inflation expectations. If central banks raise rates to combat rising inflation, it can erode the purchasing power of fiat currencies like the US dollar. This could potentially impact the value of cryptocurrencies. Market downturn. Rising global interest rates and aggressive rate hikes from the Federal Reserve in particular have negatively impacted cryptocurrencies. This is because rate hikes shift the investment landscape from risk-on to risk-off and make fixed-income investments more attractive. The rise in March and subsequent hikes could have a significant impact on Bitcoin and the wider cryptocurrency market. Now, let's discuss potential outcomes for Bitcoin and other digital currencies. Bitcoin, the most prominent cryptocurrency, has shown resilience in the face of economic shifts. However, rising interest rates have been a catalyst for Bitcoin's recent drop. Bitcoin responds better to the rising money supply, rising real interest rates, and a strong economy. This is in contrast to gold, which appears to perform better when real interest rates are falling while inflation is rising. Other digital currencies are also likely to be affected by rising interest rates. The market has already begun to price this in, with many digital currencies experiencing a drop in price. However, it's important to note that the crypto market is highly volatile and can be influenced by many factors. Institutional investors are accumulating cryptocurrencies. In the United States, many have dabbled publicly in this market, including life insurance company MassMutual, investment bankers JP Morgan Chase, hedge fund manager Paul Tudor Jones, business intelligence company MicroStrategy, and electric vehicle manufacturer Tesla. More than 150 cryptocurrency hedge funds have sprung up to invest billions of dollars solely in these assets. Cryptocurrencies as a hedge against inflation. Cryptocurrencies can potentially be used to hedge against inflation. Inflation fears are being stoked by the falling value of conventional currency. Governments and central banks deliberately expanded the money supply to invigorate economies during the 2008 global financial crisis and the COVID-19 pandemic. By contrast, the maximum supply of bitcoins is fixed at 21 million bitcoins. Financial independence. Cryptos can offer financial independence. In 2021, El Salvador became the first nation to accept Bitcoin as a parallel official currency to the US dollar. The country's president, Nayib Bukele, thinks that cryptocurrencies can deepen financial inclusion and reduce economic dependence on the United States. Let's talk about resources to help you navigate the crypto landscape. Understanding the evolving cryptocurrency market. PwC. This article provides a comprehensive understanding of the evolving cryptocurrency market. It discusses the evolution of cryptocurrency, the integrity of the cryptographic code, the potential of the blockchain public ledger technology, and the role of key market participants. Charting a path through an uncertain crypto landscape. S&P Global. This commentary provides insights on how to navigate through the uncertain crypto landscape. It discusses the challenges faced by firms in complying with complex rules around Know Your Customer, KYC, tax, and third-party risk management, TPRM. Crypto resources. What to read, watch, and stream in crypto. This resource provides a list of multimedia content to understand the crypto landscape. It includes Hash Power, a 3-part audio documentary on blockchains and cryptocurrencies, and Bankless, a podcast on crypto finance. Evaluating research on crypto regulatory landscape and digital age. This guide provides insights on how nations have approached the regulation of cryptocurrencies in this digital age and the regulatory challenges facing the crypto landscape. Artificial intelligence, a revolution in the crypto landscape. This article explores the transformative impact of AI on crypto, discussing developments, challenges, and future possibilities for the industry. Let's discuss some strategies that can help you navigate the crypto market in the face of rising interest rates. Diversification. One of the most common strategies for managing risk in the crypto market is diversification. This involves spreading your investments across a variety of different cryptocurrencies. By doing so, you can potentially offset losses in one asset with gains in another. Hedging is another strategy that can be used to protect against potential losses. This could involve investing in assets that are expected to increase in value when your other investments are performing poorly. For example, some investors might choose to hedge their crypto investments with more traditional assets like bonds or stocks. Staying informed, keeping up to date with the latest news and developments in the crypto market is crucial. This can help you anticipate market trends and make informed investment decisions. Resources like CoinDesk, Cointelegraph, and CryptoSlate can provide valuable insights. Seeking professional advice. Given the complexity and volatility of the crypto market, seeking advice from financial professionals can be beneficial. They can provide personalized advice based on your financial goals and risk tolerance. In conclusion, the impact of rising interest rates on the crypto market is a complex issue. While it can lead to a decrease in the appetite for high-risk assets such as cryptocurrencies, the crypto market's inherent volatility and potential for high returns continue to attract investors. Looking ahead, the crypto landscape is likely to continue evolving rapidly. As central banks around the world navigate the delicate balance of stimulating economic growth and controlling inflation, the ripple effects on the crypto market will be important to watch. Moreover, the potential outcomes for Bitcoin and other digital currencies in this changing economic environment are diverse. While some may face challenges, others could find opportunities for growth. Finally, staying informed and understanding the market dynamics are crucial for anyone involved in the crypto market. The resources we've discussed today offer valuable insights, but they are just a starting point. Continuous learning and staying abreast of the latest developments will be key to navigating this exciting yet challenging landscape. Thank you for joining us in this discussion. Don't forget to like, share, and subscribe for more insightful content. Until next time, keep exploring the crypto world.